Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, March 15th, 2012, is sponsored by Realtik. All right, let's get right into the mix today. The markets are trading slightly higher on the day. Dow up 38 points, NASDAQ up 14, S&P up about 7. That's about a 0.5% gain on the NASDAQ, 0.5% gain on the S&P 500, and slightly less on the Dow Jones Industrial Average. Now, bottom line is this. You have Apple, which started out sharply higher, reversing and going negative today, but the financials are leading the pack today, and they're very, very strong. Remember a couple days ago, if we go back to, I guess that was on Tuesday, when we had that monster move led by the JP Morgan buyback and the bank tests that basically all of them passed except for a couple, including Citigroup. Well, today they're having a follow-on rally, and if you go to the JP Morgan chart, take a look at this move today, up $1.18. That's a monstrous move on JPM. In addition, even Goldman Sachs, which had that bad PR from yesterday, bouncing back about $2.60 today. Bank of America leading the charge today, trading up, and get this, folks, trading up about over 4%, 4.2% on BAC. So, again, financials very, very strong today, and that's really what's keeping this market to the positive side. Technology's a mixed bag. I mean, you have Apple down about 5 points, Baidu negative, and then you have on the other side, you have Intel strong today and Google strong today, and even Amazon around the flat line. So again, it's a mixed bag there, and that's why, again, the NASDAQ's up 13 points, give or take a little bit. Not much of a deal there, but nonetheless is slightly higher. Now, if we go to the SPY, a couple things I want to point out here. We're going to look at Apple as well. I think that's an important chart to look at. But nonetheless, you have the pivot high here from yesterday, which we're just trading slightly above. Now, we confirmed above it, which meant that any pullback, your first pullback into the trend line here, the confirmed trend line, would be support, and you get a little bit of a bounce. You can see clearly that did happen. And confirmation, folks, just so everyone knows, is a technical proprietary method here at InTheMoneyStocks.com. If you want to learn it, you just have to take the 7-day free trial. I teach it off and on throughout the course of a month, multiple times. In any case, again, notice the pivot high here. You come up, you pause right under here. Really, this is where you paused, right at this little bit of a level right there, and you pulled back off of that, then busted through, came through the double top, and you confirmed on the second candle above it, and then that means the first pullback to that level, which coincided with the 20 moving average as well as the blue line, would be a little bit of a bounce play. And sure enough, you're seeing that little bit of a bounce here. Now, markets remain overbought, dramatically overbought. But again, there's just so much money flow of kind of mutual funds and average investors and light volume continuing. Get this today, folks, 103 million. That's it. That's all the volume we've done today. And again, yesterday we had very, very light volume as well, but Apple was just a powerhouse. Apple doing over 50 million shares yesterday, which is just unbelievable. If we take a look at Apple, I'm sure we're all interested here. Apple gapped up to the $600 even number. Now, interestingly enough, that 600 even number, not only is it an even number that you have to be aware of, but I just noticed over the last few days this crazy amount of bullish pumping going on. And when you see every person out there, random people who don't even trade, talking about it on Facebook and, all these other places, including, in social media across the globe, and then you have CNBC pumping it like I've never seen any stock pumped before in my life, you have to look for that kind of gap up and reversal, especially when the stock is up almost 50% since the beginning of 2012. That's 2.5 months, 50%, or about a $250 billion market cap increase. It's just it's not healthy, folks. I'm not saying that Apple can't be worth $700, $800, $900 a share one day. I'm saying that in such a short period, it's impossible to sustain this type of move on Apple. All right, therefore, I think it's very likely you're going to see a very solid pullback on the stock in the not-too-distant future. Now, again, once they have all the amateurs in, then they'll drop it. And it's interesting because the amateurs and the retail players really aren't able to buy the stock because it's so expensive. They're not able to buy a few hundred shares or 1,000 shares. What they're doing is playing the options, which is interesting coming into Options X if they try to flush those things, But in any case, Apple down right now about $4 and change. It was down 10 and had a nice bounce back. You can see, again, a pretty ugly flush from the highs. We kind of came right into this area. In fact, kind of interesting, if I take this trend line, yeah, you can see right down into there. That's where we are. We punctured it, but really never closed below this trend line right here. And you're now getting a little bit of a bounce. Any retrace into this little necktie right here at around 589 would probably be some good resistance. And again, I'd personally like to see a real firm top on Apple being put in with a close near the lows of the day. And I think if you get that close near the lows of the day, you probably gap lower tomorrow. If you close in the mid-range to higher levels, they could easily try to gap this thing up tomorrow. I think essentially what you have going on with Apple is every pullback, people are so used to the stock bouncing right back up that you're having buying coming in, and eventually that'll get people on board enough and they'll just flush it right through. But for now anyways, you're seeing a kind of a self-fulfilling prophecy as people assume every pullback's going to be bought, therefore they buy and they cause that bounce back up. Okay, taking a look at a couple other stocks, IBM higher on the day, a little bit of a rollover here on IBM, but not far off the highs of the day right now. And if I go to the daily chart, just another really extended chart. The low in mid-January was at around 177, and you're now over 200. And again, we're talking about a company here, massive market cap, and again, the growth rate here is not that spectacular. So it's hard to warrant a high level PE at this price on IBM. My guess is anything over 205 is a good area to look for downside on it, and I wouldn't be surprised if we see it again. 205 was a calculated level where if it pierces that, you start to see it kind of top out. Now, it could top out by going another dollar or two higher, but in this general vicinity, it looks like it should top out. All right, other stocks out there, folks. One of the stocks put out by Nick yesterday, a classic shorting opportunity and shorting call, was HOG. At a hit in Pierce of $50 right here yesterday. It triggered and instantaneously it pulled back yesterday and continuing to pull back today. I love it when you have master levels that are that good where even when the market continues to go up like yesterday and today and so forth, you still see the market under, or this particular stock under, good pressure. All right. Let me just look at a couple other stocks out there. What else we have? MasterCard trading down $1.50. I shorted this a while ago, and the market is up substantially from that shorting opportunity point where I took the short and gave it out to my members, but the stock is still in the money. And again, that's another master level, just showing how it plays out. Caterpillar, same thing, up 73 cents today, but again, my short was all the way up here, and I'm already out of half of it anyways with a break-even stop. So, nicely done there as well. All right, now looking at a couple other stocks out there. Obviously, we talked about the financials rallying sharply, but again, Intel is having a good day, up 1.25%. You can see Intel came down, kissed the 50-moving average here, and just had a monstrous bounce. This is another just very, very extended chart from $19 to essentially $28. That's a 50% move, and isn't it amazing? I mean, a lot of stocks are up 50% just in 2012, but even a stock like Intel, if you go back to 2011 September, which is not that long ago, I mean, that's 6 months ago, you're talking about a stock that is up 50%. And we're not talking about a small cap, mid cap here. This is a large cap play. Amazing to see that type of gain on something like that. Largest market cap stocks have really done very, very well. Now, interesting also to note, folks, while Intel's up 1.25%, Dell is actually negative. And a little bit of disparity there on Dell, as Dell, interestingly enough, if you look at the chart, ran right into the 20-moving average yesterday and then is pulling back a little bit today. All right, scanning through again, folks, as I said, Exxon and Chevron are both lower today. Let me just look at Chevron. Chevron had a nice topping tail yesterday, so I'm not surprised to see a pullback. Notice the topping tail right here on the daily chart, and notice the pullback today. One of the keys was news out that they may release oil from the strategic oil safety net there, the reserves. And that pushed oil down early on, although now it's kind of being debated whether or not they're really going to do it. But I think the ultimate course of action was just to at least let the rumor out to bring oil down a little bit, and that's what the president wants to do and so forth for now, especially in the face of possible airstrikes against Iran and so forth. But in any case, guys, just going back to the SPY, let's take a quick gander right here. Up 60 cents on the SPY right now, starting to come back in again. And again, so far we don't have enough volume to expect a breakdown in this market. But I would say if you do eclipse the 50-moving average, which is right here, and by some chance you take that level out on an intraday basis and close below and confirm, then you could see a pretty big dump towards the end of the day. But aside from that, I just don't see the volume in the market to expect a major drop. I don't think there's much upside here. I think we're essentially at the topping point, but at the same time, you need that catalyst to cause a sell. Apple's falling down again just before I leave you guys. Apple down about $6 as it's starting to come down. Look for this level to close below here. Could be a continued sell-off, and then you'd have the low of the day support. If you get through the low of the day right here, then I think you're going to this pivot low from yesterday, which will be the next spot. And if you get through that, then you're going all the way down here to gap fill from that day from yesterday. All right, so it's actually a really fun market to watch right now because, I mean, between Apple and a couple of these other stocks, you just have to wonder where they're going to go. All right, on that note, folks, I got to get back to trading with our members here at InTheMoneyStocks.com. But again, join the 7-day free trial to the Research Center, which is more for swing traders, and the Intraday Stock Chat, which is more for day traders. 7-day free trial for both. Take care.